Okay, guys, welcome to this our live. So here now we'll be having our normal live the way we normally do it. So the main thing we'll be doing today is relating to price action. I just learned it last 2 months. I've been back testing it up and down to make sure it's suitable for everybody. So yeah, that's just the game. So yeah, okay, so the main thing now is we'll be talking about price action. And the first part we'll just be talking about is just that particular price action, just the name price action, and most of the things that follows. Uh, Price action is just like a strategy. If somebody asks you, what do you trade on? When you are done understanding what I'm going to say, then that's when you can say, yeah, I'm focused, like where my where my own part is just a price action and all. You get? So in this price action now, we'll be dealing with just the way market is. You understand? It's just like I'm teaching this price action in a way that you are, even if you have not been trading since or anything, you understand it. You understand it, which is very, very important. You get? I'll be dishing out these particular things one by one. Yeah, that's just it. I will not be taking all of them at once because it's just gonna be bulky to you. So when I'm done with the price action, I will be dealing with supply and demand. In this supply and demand, it will still be relating to the price action. You get? We'll be talking about a whole lot of things though, but these particular ones that I've mentioned are just the basic ones you get to see day to day in the forex markets. So that's just it. So here now we'll be talking about the price action, which is the main thing, like the heading. We'll be talking about the price action. In a simple definition, for you to be able to understand what you are getting yourself into, price action is just the raw price of the market. It's just the raw price. This does not involve any lines. All those lines. Let me share my screen so that I'll be uh, mapping it out. Hope you guys can see it. This is my screen. So I'll be explaining these things one after the other. You see, all this line now, let's say we are mapping out a line. Let's say we are mapping out a line now, a line that is like this. You're seeing this line, you're seeing another one. Probably we are mapping out a line that will be explaining something to us. Probably we are saying that this market now, from here, it's going to sell. That's what we are saying from here, from this particular angle here. On this particular angle, now that I left it, is going to sell from there to down to this particular downside. That's what the line we are mapping out is telling us. So you understand? Based on we believe that the lines are what we use for, like it's just an example of what we are going to use to know when this particular market is changing its movement. You get? So in this particular way now, the way you are seeing it now does not actually change anything. You are the one that created that line you are seeing there. It was not the market that created it. Market was just showing you candlesticks, the red and the green candle. You get? So in the price action, when they say raw price does not involve all these lines you are seeing. Because why? You are the one that created those lines. You get? It does not involve anything relating to a line in your chart. You get? That's just the thing you need to understand about price action. Price action is just the raw movement of the market. The way the market is moving now, you can be able to identify, yeah, this is where it is going to move. This is where it's going to sell. This is where it's going to do a whole lot of things. You get? I'm just like showing you guys this particular thing. Like here now, you if you do not use price action, is yeah. If you do not use price action, you came here and probably map out this particular thing this way. map this particular thing out. Here, it is creating higher highs, higher low, higher highs, higher low, higher, okay, higher highs, higher low. So this is just what it has been creating. Till this particular one clears this particular place. This thing is not a selling strategy. See what it is showing us here. This is a 4 hours time frame. This is what it is showing us. Let me use this and explain it well. Let me just wait here. Yes. It's showing us a higher high, a higher low, a higher high, a higher low. Note that all these things you are seeing, a higher high, a higher low. Probably this low now you are seeing here. This low now that you are seeing that is creating here, it has not break the final low here. So you are not expecting or you are not meant to be saying that this particular thing is selling. Why? Because when it reaches here, it can react from this particular zone upwards, or it can decide to break this zone and keep on going. Buyers are not in the game yet, but sellers are taking over. The thing that the sellers are taking over, that is why we call this particular thing a price action. Price action, because if you use this line now and draw it, your normal line will be like, immediately it breaks that line, you start selling. That's what the line is telling you. That is what the line is telling you. That one is just the normal one you get. But the price action will tell you that that particular line now you are saying is going to bounce from there and keep on going. It will bounce from there and keep on going. Once it breaks that line, it starts selling. That's not price action. You get. I'm just showing you small, small. So this one I'm in now is this particular one we are in here. So it can still come to this particular zone. You think it's already broken it or anything to start from here and take off. That's what you people need to understand. And whenever you are taking off from there, there is always uh, there is always an imbalance. There is always an imbalance in each zone. All this zone that is moving, that is taking you up. There is always an imbalance or an other block that is supporting. There is always You see now, all these things are just things that you need to understand. You need to understand the flow of the market before you get to do anything you are doing. You need to understand the flow of the market. And the flow of the market is still what we call price action. And each particular place it's breaking, it's giving you a break of structure, giving you a break of structure. Each particular zone is giving you a break of structure. I just want you guys to be understanding this. That's really why I'm taking my time to explain it. This particular one is giving you a break of structure towards the upside. Guess what? This market now can still decide not to do this particular thing now we are drawing here. It can still decide not to do this thing. This particular thing we are seeing here, it can still decide not to do it. You understand? So I'm just giving you from my own view. I'm just giving you from my own view. So it can still decide from this particular zone you are seeing here and still start going on. And see now, my own line is just straight. But that does not mean that when it comes, let me draw another one again to explain it more. That does not mean that whenever it comes, whenever it comes like this, it cannot go like this. It cannot go like this and be creating that particular break of structure. In here now, in here now, it's just like the normal market because of you are seeing they drag down, the buying and selling people are just dragging it down. You are seeing it now. You are seeing this particular one is just for a practice purpose. This one now is mostly like the way it is in the forest market or in the markets. You are seeing it now. So here now it's still the same thing. You get to like see your break of structure. People don't get to understand all these things. And guess what? You can trade in any time frame you want with this strategy. You can trade in any time frame you want. It's just very, very simple. That's just the thing. Note that before you, there is always something here, either imbalance, either there is an imbalance here, either there is an imbalance here, or you get to see another imbalance here. Just taking my time to explain it for you. Now you won't tell me you did not understand it or I did not explain it for you. That's the reason why you are not making money. I'm seeing progress in most of you, while I'm not seeing progress in most of you. And they like see progress. They make me feel say, yes, they really work on something. We are really trying. Like I said before, like I said before, you will see you see an imbalance. Most of you think market will just come to an imbalance and just move. Yes, it happens. It does that way. It happens that way. But that does not define it. Does not define that whenever market comes to an imbalance, it gets to turn. Sometimes you check that it will come to your other block because it's sometimes does that. Sometimes it comes to your other block just to make sure it fills in every angle. Want to make sure all of you are getting it because it just we're doing it in a way. I'm not even rushing it. I'm doing it in a way that everybody will understand it. So yeah, this is just how it is. It keep on creating break of structure in a higher. And note that this is also how it happens in the negative direction. In the negative direction, that's when it's you are selling. This is an example when you are buying. There's also see an example when you are selling. Let me give you an example when you are selling. And seeing this is an example of the sell side. It's still the same thing. Still like the same thing. I would have drawn this thing before, but I did not want to do it based on most of you won't understand that aspect. You know, I wanted to like draw it before and also just come here and be explaining. But I understood that most of you will still be mistaking some certain things here. Mistaking some certain things here. See how I'm doing it like a 5 years old child. You ought to just understand it. When you understand it, I am happy. Or if you don't, how will I be able to how will I be able to be happy when you don't understand what I'm doing? It's just a simple way, simple stuff. You just have to understand. It's just very, very simple. See how I'm taking my time to do it. This is how you'll be taking your time in the forex market. You do it, or don't rush and say it's going the way your teacher taught you. No teach you things like that. I not teach you anything relating to that. I don't teach you anything like that. So you can see, taking my time to do it. Are you seeing it now? Oh, are you seeing it now? It's just very, very simple. This is I gave you the positive own, the positive direction own, and I'm giving you the negative direction own. So that it will not be like I only gave you the positive one and I'm not giving you the negative one. This is the reality of it in the forex market. This is it. You buy from here, you buy from this particular zone, this demand zone. When you buy from the demand zone, you sell from the supply zone here. This is just like demand and supply. I'm giving you this particular one. You are buying from your demand zone. You are selling from your support here. Buy from demand, sell from support. And whenever you are buying, make sure you are seeing two probably break of structure. And that second one that is breaking structure will still come down. Once it comes down, analyze it very well in the sense that you are still taking the market up. You understand? Your stop loss, people don't know where to keep your stop loss. Let me map that one out too. 'Cause I used to get that question. Where should I keep my stop loss? Where should I keep my stop loss? This is how you buy the market. Your stop loss, you are buying from your the first part whereby it hits your order block, whereby it hits your order block. That's where you are buying, and your stop loss should be immediately behind, like immediately behind that your order block. It gives more gap, give space a little. You see how it is? You buy in ASAP, you make your money and go. Once you understand these things, it is very, very easy. Every other thing there is easy. Every other thing. See, people don't understand that these things are easy. You just have to understand how it is being done. When you understand the way it is being done, every other thing, less. I hope you people are understanding what I'm saying. I hope you guys will be understanding what I'm saying. The same thing goes with your selling aspect. You buy from your imbalance or the first part of your order block, then your stop loss should be above here. Stop loss should be above. It's meant to be here though. This one is meant to be here as the order block, and the imbalance should be here. And this one should go like this. Buying like this and selling like this. So that's just it. That's just how it is. You just need to understand it. Once you understand it, once you understand this particular thing I'm showing you here, you are not going to make any single mistake at all. You cannot make mistake. You people don't know that these are the things that we all need in the forex market. These are just the things you be getting. These are just the things you be getting. It's very, very easy to fail in the forex market. That's the reason why you see uh, few persons achieve their goal once they become a trader. Once they become a trader, that's the reason why you see just few persons. They are the ones that achieve their goal. Other people get to like fail in this forex market. Other people get to fail. So if you have any difficulties in understanding what I just said, you can just comment. Let me see. you're having any issue, just let me know. Or you unmute yourself and ask your question before I continue. I'm giving you guys 2 minutes. Please, if you're having any issue, explain it here so that everybody will learn. Don't come to my DM and ask me any question if you did not ask that same question here. I know why I'm saying that. Ask your question so that everybody here will learn. Ask your question so that everybody here will learn. I know why I'm saying this. It will help everybody here. Okay, you not get the part on how to know where you should put your stop loss. Okay, that's a very good question. So stop loss is all about some people used to say uh, you get to know the amount of money you are ready to lose. You see here now, this particular place now that I circled. See this places that I circled now. Mm, Circling nonsense. Sorry. Yes, never mind. You see these places that I just circled. These places will help you. Let me put it to you so that you see. These places now that I just circled, they are just very, very important. These are the places you need to like focus on. You understand? Your stop loss should be under, as I'm saying, under, yeah, your stop loss now should be under your order block, not beside your other block, under it. Give it like 2 more pips. You get that your stop loss should be under your other block, not before your other block, or not in your fair value gap. Don't ever put a stop loss in a fair value gap zone because market can come and decide to clean up those fair value gaps there. It can decide to come and clean up those fair value gaps there. And guess what? You will tend to like lose that particular trade. So it is just very, very simple in understanding. It is very, very simple in understanding. So that's just the thing. You know where you keep your stop loss, you know how to put it, you know every other thing. So that's just it. So who have another question concerning how to place their stop loss and all, or any other question? Hope. If you have any other question, just let me know. You can unmute yourself and say the question. You can unmute yourself and ask the question. Can I explain it one more time? Okay, I think you are going to watch the video. I can't actually. Okay. I should explain if it is the top loss on, let me explain it one more time. But if it is in a hole, no, you guys will watch the video. So yeah, that was just it. So yeah, so going forward, okay, let's go a little bit backward and explain the stop loss. The stop loss should be beneath your order block. This is your order block, OB. After your imbalance, you get to see your order block. That's your demand zone. That's demand zone one, demand zone two. You see it, demand zone one, then demand zone two. If it creates another one, let me show you again. If it creates another one from here, decide to it's like they even do. Decide to create another one. Don't make a mistake. You decide to create another one. Let me just draw it straight. You decide to create another one from there to here. Keep on moving. You decide to create another one here. This one now will be demand zone 3. Let me map it out. I'll also show you where your stop loss will be. This is demand zone 3. It's the fair value gap. You are buying from your, let me just put it here. Are you seeing it now? So you are buying from this particular zone again. You always buy from the demand zone, then your stop loss should be beneath the demand zone. It is not always like this. Market doesn't always come out like this. It doesn't always come out simple the way you just saw it. See how it is in this side so that people will see. It doesn't always come out simple. You see how it is confusing here. See how it is confusing here. It is just very simple. Are you seeing this demand zone? Let me map this thing out so that people will understand what I've been saying here since. Where is that candlestick? Okay, yeah. So this is your break of structure. Break of structure. That's your break of structure one. Or break of structure two. Your break of structure three. Okay, so the way it is like this now, you see that market reacted from these two candlesticks. You know, the main thing I'm here to teach is the wrong candlestick. It's not even this thing that I'm explaining. It's reacted from this zone here and went up. And you are seeing that the market reacted again from this other block. I'm mapping out the other block. Seeing it reacted from this other block here. And guess what? Let me zoom in this thing. It's reacted from this other block. Guess what? If you are buying from here, this is where your stop loss will be. Let me bring this stop loss stuff. This is where your stop loss. You bought from immediately it hit that your other block. You are going to be buying from here. Then your stop loss should be beneath that other block you are seeing here. It is just very, very simple. And probably you target high. You target a new high. Just target it. Probably you left it this way. Target a new high. That's just gonna be your motive or where you are looking at. This is Note that this particular thing I'm just showing you here is for the smaller part of it. You understand? This is the 4 hours time frame. You can still see it in 15 minutes. You can still see it in 1 hour. You can trade any time frame with this strategy I'm just showing you. It's just for you to see that there is a lot of stop losses to be filled here. You understand? And those people that used to find this particular trade are people that have, you can have $50 accounts. You can have $50 accounts here and you are using 0.01. Probably your stop loss here with these pips I'm seeing here, your stop loss here might reach $30 to $40 and your target here might reach 90, 80 to $90. That's if you're using 0.01, or it can still reach 100, 150. I did not calculate it. That's the reason why I'm saying or. You get. That's just the thing you guys need to understand. And guess what again? Let's just remove this one aside. You will have seen this one now, how it is. Guess what again? It still reacted. Let me use. It still reacted from this same other block again. Are you people understanding anything now? Still reacted from this same other block, this other block we are talking about. Remember, we said it is not when it comes to your fair value gap, that's your imbalance that you get to like remove or anything. You get it came to your other block again. This is your imbalance zone. This same imbalance we are talking about here. This same imbalance we are talking about here. Your other block, then your imbalance. It came to your imbalance, tapped into your other block, probably a little bit or something. You get and started moving its way. Started moving its way. So yes, tapped your imbalance again. So here now, if you are to put your trade, or if you need to set your trade, you set it immediately, it taps to your other block. It's just very simple. Then your stop loss should be this way too. See the way it is here. Immediately beneath, like the next one beneath that particular again, your other block, beneath your other block or your demand zone, anyone you want to call it. So you target the next highs, you target it. That's how you make your money. This thing is not same, is not hard. You get now it is creating. I don't know what it's creating. Just in this kind of trade now, you just get to like look at it, be looking at it, and see what it creates. You get this is just how it is. It is not hard. It's not hard. You should not be making things hard for yourself. Ask questions and it will be answered for you, or you will be answered. You get that's just how everything is. That's just how everything is. You don't need to be confusing yourself with things you know you don't know. You don't know something, ask questions. You don't know something, let's ask questions. So, let's talk about this candle. This is a week. This is a full body candle. This is a full body candle. Maybe if you calm down so that I'll set it well. I was meant to like set it for you, but something happened. I couldn't do that. I said you guys need to like see me setting it myself. So this is just like the main thing I'm meant to show you guys here. Maybe for another darker color, something very dark that can cover the black. I think this is better. Are you seeing it now? This is a candlestick. The candlestick, let's say the candlestick opened. It's opened here, from here. And when it was opening, it was going small. Probably it's open. Let me let me show you guys something first. Let me leave it the way it is and write the names of the body. Then you get to understand what I'm talking about here. Because most of you, they leave you will not understand anything. Because the open, I'm taking my time to do it. And you when you will be analyzing, don't take your time and do it. Or don't take your time, just rush and analyze and go. You get that time now. You will tell me that the trade did not go your way, or you lost money in it when you were not able to take your time and do it. It's just a very, very simple something. You need to understand, you need to understand it first before any other thing. And it's Very, very easy to understand. Just show you. This is the open, this is the close, and this is a bullish candle. I don't think you see somebody that will have time to explain it for you this way, the way I'm doing it now. It's gonna take time before you see somebody that have that time. You guys are seeing the way it is here now. This is the body. This thing is just the body. Let me write it down because it's everything that you guys need to see written out for you. Most of you that are not hearing me, you can still watch the video of it. I think I'm recording it. Yeah, you still watch the video. So yeah, you are seeing this particular line you are seeing here is the wick of the candle. I'm explaining what candle is and also how to identify when you get to see a candlestick in a forex market. This is the wick. This is another wick here. This is the open. When you see this open now, okay, and this is the bullish candlestick. This is the body. This is a bullish candlestick. You are seeing this particular thing this way now. You are seeing the open. Let me show you how this market gets to like open the way you are seeing it now. This market gets to open here. You first of all went down. First of all went down, creating this wick here. You understand? Before it started coming up from here, started coming up, and that's how it was able to go up to this length, probably and probably create this wick. I don't know why. Probably create this wick here. This wick you are seeing. This is just how it is. Nothing much, nothing less. Just have to understand it. This is just how it creates this wick here. It moves up. That's the reason why you are seeing. I said open. It's open from there. This is a buying candlestick. The same thing goes to the selling candlestick. It can still open from this side and decide to go down. That's buyers or seller. Okay, that one is sellers are taking over. You understand? I'm just explaining how candlesticks work. I don't think anybody will explain these things to you. You get, I'm just explaining how it works and also how you can be able to understand it when you see it anywhere. Somebody say I should explain why we don't put our stop loss in the FVG. I think I did that already. You cannot put your stop loss in your FVG. Your FVG reacts with the market, and market can still tend to like come down to it and clear it. If you don't understand what I'm saying, you can still go and watch the video later on. Okay. So yeah, this is just a very simple note. This is just the explanation of a bullish candlestick. The same thing goes with the bearish candlestick. You get. I'm not gonna be showing you the bearish candlestick aspects. You just have to use your sense and put it the opposite position. So this is just how these candlesticks work. It can still decide, this particular candlestick can still decide to close in here and create another candlestick follows. Then it will not have any wick. Are you seeing it now? It will not have any wick. It just closed here. And it also indicates something when you are doing your analysis. You are looking for things to use and justify whether the market is going to be going up or not. You get. So that is just it. That is just a very, very simple thing. So the candlestick indicates how much the market in particular period of time in our, you guys are understanding what I'm saying. The candlestick indicates the particular movement of the particular movement of the market within a period of time. That's what the candlestick is. This candlestick now can be 1 minute, it can be 1 hour, it can be one day, it can be 1 month. You understand? It can be 4 hours, it can be 30 minutes, it can be any hour. Just for you to understand how it reacts. You are seeing how these particular ones are. It came down, this particular red candle came down to this place, tapped the other block here. The next candle came up, ASAP. Why? First of all, it is creating what? Higher highs and higher low. It is rushing to create another higher high, another higher low, created, reacted from the fair value gap through the other block. You justify these candlestick the way they act, the way they show, like in the market, the way they show. You need to understand how to do all these things. Because if you can't, that's where you have start having problems. It is the simple logic. That's just the thing. You can use any hour, anything at all. So that is just it for this particular class. That's just it. So now tomorrow we'll be talking about logic, logic-based concepts. Like it's just the simple things you guys get to like know, like market structure. As me treating market structure again. I think I've done it in my other video. As me teaching market structure. So I hope you guys understood everything I said in this live about understanding how the market moves, how the market works. You get to see your entrance, your leave, and everything. If I were to be you, this is where my take profit will be. Immediately, it creates higher highs. I take my profit and disappear. This is just how it is. This is just how I take my own profit. Immediately, it creates higher high. I get to disappear. It is just a very, very simple logic. No two ways about it. Because nobody owns the markets. Your papa don't own the market. So you don't have to like trust any process that is being shown there. Just have to trust your analysis. You do it when you understand. So with this, I'm done with today's class. Today's class, we just talked about price action and the way it moves for a better understanding. So yeah, that is just it. We watch out for another class. Watch out for another class. And if you have any question, you can drop in the comment section. Thank you.